Infosys eyes US $400 billion AI market by 2030, FY26 revenue hits 1.78 Lakh Cr. Synopsis. Management commentary accompanying the latest annual results has put a number on the AI opportunity ahead for one of India's largest IT services companies, sizing the addressable enterprise AI market at US $300 to $400 billion by 2030. AI already contributes close to US $1 billion in annualized revenue, but turning a fraction of that future market into revenue would still require the company's AI business to grow many times over from where it stands today. A leading Indian IT services major used commentary alongside its FY26 results to lay out the scale of the opportunity it sees in enterprise artificial intelligence. Management pointed to engineering, technology modernization, data services, AI trust and automation as the pillars of a market it now pegs at US $300 to $400 billion by 2030, arguing this gives the company a long runway even as growth in traditional IT services has slowed. With a market capitalization of Rs 4,05,108.67 crore, the shares of Infosys Limited were trading at Rs 998.40 per share, down 0.2% from its previous closing price of Rs 1000.40 apiece. It is trading at a PE of 13.77, and the stock remains well off its 52-week high of Rs 1728, a decline that reflects broader concerns across Indian IT names about AI-led disruption to traditional services revenue rather than anything specific to this company's execution. The AI business today. AI-linked services now generate roughly US $1 billion in annualized revenue for the company, which management pegs at about 5.5% of total revenue. That implies total revenue running close to US $18 to $20 billion, broadly consistent with the US $20.2 billion FY26 figure management cited at its annual general meeting. The company says it is working with 90% of its top 200 clients on some form of AI initiative, and it has combined its Topaz AI platform with its Cobalt Cloud offering to give enterprise clients a single route to deploy AI securely across legacy systems. Large deal signings held up through the year, with total contract value of US $14.9 billion in FY26, more than half of it from net new business rather than renewals, which points to a reasonably full order pipeline heading into FY27. Reality checking the 15 billion number. Retail investors doing their own back-of-envelope math on a US 300 to 400 billion opportunity naturally arrive at large numbers, and a rough 4 to 5% capture rate would indeed put the company's AI revenue somewhere near US 15 billion. It is worth sitting with what that figure actually implies. AI revenue today is close to US 1 billion. Getting to US 15 billion by 2030 would mean roughly 15x growth in 4 years, or a compounded annual growth rate above 90% sustained for half a decade, a pace this company has never delivered even during its fastest expansion years. It would also mean the AI business alone growing larger than the company's entire current revenue base. This does not make the opportunity illusory. Legacy technology modernization is genuinely becoming more urgent as clients embed AI into older systems. But an addressable market is not a revenue pool up for grabs, and the gap between the two is where retail investors typically overshoot. A more grounded base case would see AI revenue tripling or quadrupling by 2030, not jumping to a double-digit billion figure off a single Investor Day slide. Balance sheet, cash flow, and capital returns. The company remains debt-free at the group level and generated free cash flow of US $3.7 billion in FY26, equivalent to 112.6% of net profit, a conversion ratio that gives management room to fund acquisitions without leaning on borrowings. Recent bolt-on deals in healthcare IT, insurance consulting, cybersecurity and cloud transformation extend its capabilities in verticals where AI-linked demand is running ahead of the broader IT services market. On the people side, the company added more than 20,000 graduate hires in FY26 and closed the year with over 325,000 employees, alongside a stepped-up push on AI training and certification, a hiring pattern investors should watch since headcount additions at a time of AI-led automation concerns signal management still sees volume-linked demand alongside the AI shift, not a pure headcount replacement story. Business overview. Infosys Limited, incorporated in 1981 and headquartered in Bengaluru, is India's second-largest IT services company, providing consulting, technology and outsourcing services across digital transformation, cloud, and AI. For FY26, the company reported consolidated revenue of Rs 1.78 crore, up 9.6% year-on-year, and net profit of Rs 29,474 crore, up 10.2%, with the board recommending a final dividend of Rs 25 per share. Return on equity for the year stood at 32.2% and return on capital employed at 40.3%, both well above the levels typical of the broader IT services industry, and the dividend payout ratio has averaged close to 67% over the past 2 years, underlining a business that keeps rewarding shareholders even as the AI narrative plays out over a longer horizon. Disclaimer: this article provides stock market news for informational purposes only and should not be construed as investment advice. Readers are encouraged to consult with a qualified financial advisor before making any investment decisions.